In the Philippines, power outages aren't just an inconvenience. They're a daily reality for millions. And yet, we're paying among the highest electricity prices in Asia. Why? Because we still depend on imported fuel. Dirty, expensive, unreliable. But there's one Filipino company trying to change all of that. And they're not just dreaming big. They're already building solar farms, wind projects, and clean power plants across Asia. Meet ACEN Corporation, the Ayala Group's quiet energy disruptor. Their goal? 100% renewable energy, 20 gigawatts by 2030, and a better future for all of us. In this deep dive, we'll explore how ACEN plans to change the Philippine energy game and whether its stock could power your portfolio. Because if they succeed, they won't just change your electricity bill. They could change the future of the entire nation. To understand ACEN, you need to understand who's behind it, the Ayala Group, one of the oldest and most respected business empires in the Philippines. In 2011, Ayala made a bold move. They entered the energy sector, not to build more coal plants, but to bet on the future. That's when AC Energy was born. At the time, renewable energy was seen as too expensive or too idealistic. But Ayala wasn't chasing trends. They were planting seeds. Their first big break? The North Luzon Renewables wind farm in Ilocos Norte, followed by solar projects across Luzon. Slowly, quietly, they were building a renewable empire. In 2022, AC Energy officially changed its name to ACEN Corporation, signaling one thing. This isn't just a sideline anymore. It's a full-on mission. Today, ACEN isn't just focused on the Philippines. They're building wind farms in Vietnam, solar plants in India, and massive clean energy grids in Australia. From just an idea in 2011 to becoming one of the largest pure-play renewable energy companies in Southeast Asia in just over a decade. And the timing couldn't be more urgent. Climate change, energy insecurity, skyrocketing fuel costs. Governments and investors are now racing toward clean energy. ACEN was ahead of the curve, and now the world is catching up. So, how does ACEN actually make money? Simple. ACEN builds and operates clean energy plants, solar, wind, even battery storage. It then sells that electricity to utility companies, large businesses, and through the wholesale electricity spot market, or WESM. Some of that electricity is under long-term contracts, meaning stable income. The rest? Sold in the open market, where prices can spike during high demand. And they're not building small. Just look at this. San Marcelino Solar in Zambales, 585 megawatts, one of the largest in the country. Or the Beloy, Cagayan Wind Farm in Ilocos Norte, 160 megawatts of clean wind energy. But here's where things get interesting. Nearly half of ACEN's generation capacity is overseas. That means they're earning in stronger currencies, Vietnamese dong, Australian dollars, Indian rupees. This gives ACEN a unique edge over most local energy players. They're not just betting on one economy. They're spreading risk across Asia-Pacific. And they're not stopping at generation. ACEN is heavily investing in battery energy storage systems, the future of grid reliability. This means more stable electricity during brownouts. And when paired with solar and wind, batteries turn clean energy into a 24/7 solution. From 3.4 gigawatts of renewable energy today to 20 gigawatts by 2030. That's 6 times the current output. With joint ventures across Asia and deep funding from the Ayala Group, that goal isn't just possible, it's likely. Let's talk numbers. Because while ACEN's vision is inspiring, investors need to know if the business is actually performing. After a bumpy 2023 caused by energy price volatility and supply chain issues, ACEN came back strong in 2024. Revenue jumped, profits stabilized, and their asset base kept growing. But here's what's important. Most of ACEN's growth is still asset-heavy. That means high upfront spending, and not all projects contribute profits right away. This is normal for energy companies. You invest billions today, and earns steadily for 20 to 30 years. The real gains come later. Next is dividend payouts. ACEN does pay dividends, but don't expect massive payouts yet. They're reinvesting heavily to fund expansion. For long-term investors, that could be a good sign. Growth first, then reward. Here are some risks you must know. Foreign exchange risk. Almost half of ACEN's revenue comes from outside the Philippines. That means earnings can swing based on currency strength. Project delays and regulatory risks. Large-scale energy projects are complicated. Permits, local politics, environmental approvals. Any delay can push back profits. Energy price volatility. While renewables are cheap to run, ACEN still sells in a spot markets where prices can be unpredictable. Dilution risk. To fund expansion, ACEN has issued new shares in the past. That could dilute current investors if not managed well. Every stock has risks, but with ACEN, the question is, do the long-term opportunities outweigh the short-term volatility? Let's talk about ACEN's stock performance. From mid-2020 to 2021, ACEN was one of the hottest stocks on the PSE. Investors jumped in on the clean energy boom. But as inflation rose and interest rates tightened, the stock cooled off, dropping to as low as 3.10 pesos by early 2024. Let's address the truth. ACEN's stock has crashed. From a high of nearly 13 pesos during the renewable energy boom, it's now trading at around 2.50 pesos per share as of June 2025. There are a few key reasons behind this steep decline. Slower than expected ramp-up of key renewable projects. Rising debt levels from aggressive expansion. Weak profitability despite strong revenue growth. Investor fatigue from years of underperformance. So at 2.50 pesos, is it undervalued? Or is the market pricing in real risks? ACEN might look cheap on paper, but without sustainable earnings or strong cash flow, price alone doesn't make a bargain. If you're already invested, this is a test of conviction. And if you're on the sidelines, this might feel like a falling knife. But here's the other side. ACEN still owns clean energy assets in the Philippines, Australia, and across Asia. If management can deliver on long-term targets, this could become a turnaround story. ACEN's fall to 2.50 pesos is a warning, not just about hype, but about execution risk in high-growth sectors. If you believe in the company's ability to bounce back over the long term, this could be a deep value play, but only if you're ready for volatility, patience, and risk. If you found this video helpful, consider subscribing to Thrifty Finance Vision PH. We create deep dives just like this to help you make smarter financial decisions, one step at a time.